development of flats in the rebel service, and it is set to run instead of from the Union forces, the commissioning of commercial flat technology in the Army and British America. How?
Placed back in his mother's care after she went to family court Friday. During a hearing, it was revealed that the daycare staff mistakenly released the child, Stanton. Investigators are looking into whether Stanton used a fake ID to pick DJ up from Patricia's child care services Thursday morning, then left the child outside a building on 132nd Street near Frederick Douglass Boulevard in Harlem. The daycare had previously been cited twice for not keeping a list of authorized pickup.
That they're getting, the savings that they're getting from tax reform.
Is corporate America deleveraging, Henry?
Maybe marginally. We are getting late in the cycle. There's no denying that leverage is elevated, both corporate and government. So, listen, the front end of the corporate curve, call it 1 to 3 year space, over the past couple of years has gone up from 1.5% yield to 3%. So I think corporate America is getting the sense that interest costs are starting to be real. And where they are at this point in the credit cycle, they're swimming against the tide, with the Fed moving the other direction. So I think they're waking up a little bit to extended leverage and perhaps challenging market with that persistent bid from retail and inflows, maybe reversing a little bit.
Short-dated investment grade's got this real technical factor behind it, in the sense that the biggest buyer of short-dated investment grade were the biggest issuers of long-dated investment grade. It was the tech companies. That's what's so bizarre about investment grade right now. How much of it is technical, and how much of it is just a fundamental backup in yields?
I think there's a good amount of technical. We saw that in the first quarter, and we're likely to continue to see it. That technical pressure could very well invert the curve, and we think a lot about that in the multi-sector income fund and what that means. That's why we're sticking away from domestic credit. That inversion, while not necessarily signaling a recession immediately, could very well.
Okay, it's May 7, 2018 at 9:34 a.m. I don't know what this inspector, the last one, DEP inspector who came here, must be dreaming or in another world, or he comes here, he shows up and says, oh, there's no smoke. Just because there's no smoke in the very instant that you're here, and then he claims, oh, there's no smoke problem here. I mean, I never claimed that it's 24/7, but it is intermittent. And your job is to come here and find out those intermittent times and to do your job, and not just show up here 1 second of the day and say, oh, there's no smoke problem here. There's never any smoke here, and make all these false insinuations. I'm so upset I can't even talk at the incompetence of certain, the lack of caring and incompetence of certain inspectors, DEP inspectors, not all of them. Okay, so once again, it's May 7th, 9:35 a.m. May 7th, 2018, 9:35 a.m. We're looking out of the windows of 255 West 43rd Street. We're looking direction northwest at the Twin Chimneys, operated by John's Pizzeria. They're located at 260 West 44th Street. and I have to leave to breakfast, so I'm trying to wrap this up quickly. So let me zoom out. Let me do with myself. Well, before I zoom out, let me go on my cell phone.
So the total value, $7.6 billion. It's an industrial warehouse deal because of the popularity now of online shopping. There was a deal last week as well, an $8.4 billion deal in the same industry. So seeing some consolidation here among those warehouse REITs. John?
Thank you very much, Julie Hyman. Speaking of that deal, we did get the confirmation earlier confirming the proposal to buy Athena Health for $160 a share in cash. The stock up by over 20% this morning, positive 21.46%. A little bit more on that deal a little bit later, right here on Bloomberg TV. Joining us now, though, Barry Bannister, Seyfarth Nicholas, Chief Equity Strategist, who's a short-term bear. By the middle of the third quarter, he sees the S&P 500 hitting 2,520 and a yield on a 10-year at 260. Barry, get me down to 260, 10 basis points north of where the 2-year is now on a 10-year yield. What takes us there?
Yeah, I think what we're seeing is a bit of an echo of the policy divergence drop that we had from third quarter 14 to first quarter 16. You got geopolitical wrinkle this time. You got trade is going to get more heated. The Iran thing is going to get more heated. China is slowing down both on the credit impulse and some of the more industrial production, manufacturing side readings. And Europe is slowing down. So you have this policy divergence where the Fed is plowing ahead, raising real interest rates, and as that occurs, it has since 2016, PE multiples compress. Same thing happened in the 3 years after a Fed real rate cycle started in 1992 and 2004, and again now in 2016.
Yeah.
So PE compression offsets a lot of your earnings growth, and you end up with a market that's down a little bit. On the yield, it's more of a risk-off inflows trade. Take a look at copper relative to gold. It does not support the recent spike to 3% on the 10-year.
So, Barry, this could well mean yield curve inversion. If that's your base case for the Treasury market, does that necessarily have to mean that the S&P 500 underperformed, declines through the end of 2018?
Well, no, I don't think it's going to be through year-end. I mean, I'm looking for a mid-year dip through into the summer. I think it's going to be a long, hot summer for investors. I've been calling it this volatile flatness and policy normalization. The Fed realizes they need to normalize the short end. They're somewhat restrained by events overseas. But the domestic mandate still operates with some consideration for international factors. And as a result, you have this squeeze going on. And I would not discount some of the trade, Iran, China, oil, Europe, slowing issues that are going to crop up. I think people are just way too casual about some of the risks right now.
Barry, your sector strategy appears to be very defensive in the short run. Yet you're suggesting that you have this sort of short-term correction followed by potentially a stronger surge at the end of the year. Where would you be adding as the market corrects, considering that you are expecting stock prices to end higher by the end of the year?
Yeah, we'll have to reassess at that moment at around the low 2500s what has happened in terms of the individual sectors. But I would expect the Fed to not be excessively hawkish as they exit the year. So let's say the September meeting. And that might trigger a rally back to these risk-on stocks and technology where they're seeing good indications of capital spending desires by recently tax-relieved companies. We might also see some recovery signs on the consumer if oil prices come in on a stronger dollar. But from now to then, I'm just focused on the very short term. I think we're all traders now, and we have to be very short term in our focus in this volatile process of policy normalization.
Right. Can you tell us a little bit about how you view the recovery in oil prices and the bounce in the commodity complex at large?
Okay, this is May 7th, 9:42 a.m. Waiting for my breakfast partner to show up. We eat at the nearby every morning. We rehearse our lines together.
businesses, payroll is complex and time-consuming, and mistakes can mean tax trouble. Sure Payroll makes it easy to pay employees and file federal, state, and local taxes with accuracy guaranteed, all done online in minutes, and with award-winning support, even on weekends and evenings. More time for you, less time on payroll and taxes. For 1 month of free payroll, visit SurePayroll.com now or call 844-SURE-PAYROLL, SurePayroll.com. Interactive Brokers pays 1.18% on idle cash in your brokerage account. Do you know what your broker pays? Most banks or brokers pay nothing, or less than 0.25%. Move your account to Interactive Brokers and start earning interest.
Money is like life. You have to decide how to get the most from it. And just like life, every decision affects every other decision. The trick is making good decisions today, so you're ready for tomorrow when it comes. So we gave you some simple free tools that let you see how what you do today will affect your tomorrow. So you can make smart choices about how to spend your money and your life. Personal Capital. Get to know your money.
Here's to your employees, who had their hands full well before you found them. They're distinct, passionate, they dream big, and live for the little moments. They've got a lot going on, before 9 and after 5, yet they take care of your business, no matter where their path leads. Take care of them with HR technology that puts employees first. Ultimate Software, people first.
This is Bloomberg Markets, The Open. I'm Kayla Lyons here in the Hewlett-Packard Enterprise Green Room. Coming up later on Bloomberg Markets, Larry Robbins, Glenview Capital Management CEO.
The
Emerging market sell-off accelerating as a stronger dollar weighs on demand for riskier assets. Argentina, among the hardest hit, unexpectedly raising interest rates for the third time in 8 days to 40%. Bloomberg View columnist Mohamed Al-Arian writing that the country's central bank seemed to misread the situation and tried to resist significant external forces by relying on international reserves to massively intervene in the currency markets. Unsurprisingly, it was to no avail. Still with me, Michael Scholl of Market Field and Henry Peabody of Eden Barnes. Michael, your thoughts on what's been happening with EM? There are the idiosyncratic reasons in, say, Turkey and Argentina, but more broadly, there seems to be the stronger dollar story underpinning a lot of the action.
I believe we see a weaker EM currency story. I mean, the underlying markets in EM have actually performed pretty well and really have avoided most of the correction. But the currencies have been weak, and frankly, they've been very weak since sanctions on Russia were put in place. And I do wonder whether or not the sudden weakening of the ruble really caught people playing EM carry by surprise, and we're in the middle of something of an unwind here.
So how much of it is an index story driven by the tourists getting scared?
Well, I think it's real money. It's not necessarily tourists. I think people have big levered books picking up the positive carry in EM, and I think they've been hit by some real weakness. And you have an unwind.
Short-term unwind of the carry trade? Reasons to get back in here, Henry?
Yeah, from U.S. front-end rates going up, it's possible that it continues a little while longer. You see that unwind of levered books, but you are getting to the point at which some of these currencies are starting to look a little bit attractive. You do see the high yielders get hit first, and that calls into question a little bit of capital availability. Are we seeing global liquidity be pulled in? So that's consistent with that performance.
But we've had positive flows, and a country like Brazil has pretty good data which comes out monthly and continue to have positive FDI.
Absolutely, and you're seeing lower rate pressure there. So you're seeing some of that currency weakness in Brazil being offset by rates performing reasonably well. So, I think there is probably an opportunity at some point soon in the context of a longer-term dollar negative story.
And to your point, is the Brazilian real being used? Does it have different kind of trading characteristics at the moment as opposed to what it was before?
Well, that's one thing our trading desk is starting to talk a little bit about and think about, which is that currency being used as a hedging vehicle, whereas that role was typically Mexico? There's a lot of noise going on in Mexico, obviously with NAFTA, which we think probably gets done for various reasons. But there is that technical, and it's something just to keep your eye on as that develops. It's early stages in thinking about that and thinking about the price action.
You would think that the commodity story is the backdrop to all of this. And let's be clear, for the last 48 minutes that you and I have been talking, incredibly bullish commodities, quite bullish EM as well. Why is that not supporting the overall EM space at the moment?
Well, because you have different flows. As I said, the underlying equities are actually performing really quite well. The Brazilian market is still very close to an all-time high. It doesn't show any kind of weakness. The weakness is in credit looks okay as well. The weakness is very specifically in EMFX, and this looks to be EMFX flows reversing fairly violently.
So why shouldn't that spill over to other asset classes? For a place like Turkey, let's think about the big crude importers. If you're going to remain very bullish on crude, can you still be bullish Turkey?
I'm not particularly bullish on Turkey, so I don't have to worry about that one. But I think there is always a risk that if EM losses aren't picked up by other asset classes, so EM local credit has done poorly, EM equities priced in US ETFs haven't done well for the last few weeks, the danger is that leads to a secondary liquidation of underlying assets. If that doesn't happen, I think the currencies look very cheap. And I think you'll have a powerful rebound at some point this fall.
Henry, let's think about the trade for emerging market fixed income over the last year or so. A lot of people very comfortable taking the FX risk because the reality has been the dollar's been a much weaker trade. The story of the last few weeks is the dollar has made a comeback, recoupling with short-term rates here in the United States. Is that a thing that lasts? And what does that mean for some of those people exposed to the currency story that have taken those trades that were made, say, a year ago, 2 years ago?
Well, let's just remember that things don't move in a straight line forever. It isn't up and to the right with a slope of one. What we're seeing here is a situation where that global growth story, you're seeing a little bit of questioning, specifically in Europe, so that uneven growth story takes the pressure away from the dollar down, at least temporarily. And you've had a big short. So these are naturally occurring portions of the cycle where you get to adjust to a higher dollar. We don't think the dollar continues higher. We think it reestablishes a lower trend. So yes, there will be some forced selling, and that's probably what we're seeing, but I think there's going to be the opportunity to get back on that, especially as we start to talk about the train wreck that is our fiscal situation going out the next couple of years.
We'll get there. Michael Scholl, just to wrap things up with you, time horizon really matters here. For a lot of people, very bullish EM. They're looking at a cycle that they think has only just begun. Explain to us why it's only just started.
Well, because EM had a bear market in the middle of our bull market, and countries like Brazil had to politically restructure and fiscally restructure, and have come out of it, I think, in a much better place than we were, say, five years ago. So I would be patient with EM.
That's your call too, Henry?
Agree. The capital flowing into the area, the availability of capital, the lower cost of capital over time is going to benefit these countries that take the hard steps of adjusting politically. I think your point is spot on.
Henry Peabody, of Eden Dance, alongside Michael Shull at Market Phil. Been great to catch up with you guys this morning. Thank you very much. And the markets, about 22 minutes into the session here in the United States. A day of gains potentially. A morning so far at least. We're up 0.6% on the S&P 500, positive 0.71% on the Dow. Some stability in the bond market and some dollar strength in FX. From New York, this is Bloomberg.
Oh, are you kidding? I've called the health department. I personally brought a roach to the health department. I've seen bugs. I've killed bugs. When you're in dialysis, you see things. I've seen food stuck between the chair, blood in the chair. I don't believe the dialysis corporations value life as much as they value profit.
Learn more at kidneypatientsdeservebetter.com.
Juniper powers some of the most demanding cloud networks on the planet, and our goal is to make the complex simple. We're using Oracle Marketing Cloud and Customer Experience Cloud to help translate data into insights so I can get closer to my customers and accelerate my business.
Oracle, more enterprise cloud applications than anyone else.
Let's get started. Show of hands. Who wants customizable options chains? Who wants to make it fast and easy to analyze and take action? How about some autonomous options fees? Are you raising your hand? Good. Then it's time for Power E-Trade, the platform price and service that gives you the edge you need. All right, one quick game of rock, paper, scissors. 1, 2, 3, go. E-Trade, the original place to invest online.
Time now for the trading diary, what you need to be watching through the week ahead. NAFTA talks resuming in Washington today. Tuesday, Disney reporting after the closing bell. Wednesday, we get results from 21st Century Fox, so a bit of a media theme to equity earnings through the week. Thursday, a Bank of England rate decision. Expectations were for a high. Governor Carney gave some guidance to that not happening, and then the data kind of confirmed his stance potentially. We'll get to that announcement later in the week. Then on Saturday, the main one, I think, in terms of market risk, for the commodity market at least, the President will announce his decision on the Iran nuclear deal. Joining me for some final thoughts, I'm pleased to say, is Bloomberg's Lisa Abramovich. Lisa, what are you looking at?
The pain trade. JP Morgan analysts identified it as potentially being a stronger dollar in tandem with increasing U.S. rates. The idea here being so many people are positioned for Europe, for example, to accelerate faster than the U.S. That isn't happening. That will feed into a stronger dollar kind of situation. People have been positioning for higher rates from the Federal Reserve, slowing longer-term growth. There is some speculation now that bigger auction sizes could lead to higher yields. Basically, people are not positioned for this scenario, and JP Morgan analysts see this happening.
118 handle on euro dollar, really briefly earlier in the session. I guess JP Morgan get into the idea that rates could recouple with the FX market because they certainly decoupled last year. Why is that theme so much more different to the year gone by when we're talking about these structural issues, the current account surplus in Europe, the twin deficits in the United States? Why is it all about rates again?
Well, there's a big, first of all, nobody really understands why there was this decoupling from rates and currency, right? People didn't understand the stronger dollar, weaker dollar point of view.
Yeah.
But also we've gotten that disappointing data out of the Eurozone. And I think that this isn't just about interest rates, it's also about economic prospects. And right now people are rethinking the idea that the Eurozone is accelerating while the US slows down.
Bloomberg's Lisa Bravis. She'll be on Bloomberg Radio in just a moment. You can catch her with Kim Fox coming up at the top of the hour. Tomorrow, you can catch a conversation. He's back with us. Mohammed Al-Arian, Bloomberg View columnist and Allianz Chief Economic Advisor, will be with us through much of the hour tomorrow. Don't miss that conversation. 26 minutes into the session here on the Bloomberg TV this Monday morning. Stocks making a bit of a comeback. Up 0.6% on the S&P 500. Up 8 on the Dow. This was the countdown to the open.
Your budget. TripAdvisor now searches over 200 sites to find you the hotel you want at the lowest price. Grazie, Jimbo. Find a price that fits. TripAdvisor.
It started with a discussion. Now you're both doing this for him. For all he's done for you. At PNC, we're here to help you make a plan today, tomorrow, and stick with it. PNC. Make today the day.
Jeff and Susan are heading into retirement, and market volatility isn't top of mind. That's because they have a Shield annuity from Brighthouse Financial, which allows them to take advantage of growth opportunities in up markets, while maintaining a level of protection in down markets. So they're less concerned with market volatility and can focus more on the things they're passionate about. Talk with your advisor about Shield annuities from Brighthouse Financial, established by MetLife.
That was awful. Why are you so good at this?
Had a coach in high school. Really helped me up my game.
I had a coach. Math.
So why don't traders have coaches?
Well, who says they don't? Coach McAdoo.
You know, at TD Ameritrade, we offer free access to coaches and a full education curriculum just to help you improve your skills.
Boom!
Man, skills.
Education to take your trading to the next level. Only with TD Ameritrade.
Locked into an expensive internet and phone contract? That's bad for business. Spectrum Business is good for business because there are no contracts and no hidden fees or added taxes either. And Spectrum Business will even buy out your existing contract up to $500. And that's good for your business. Get faster internet and advanced voice from Spectrum Business with no contracts. Call 877-509-4352 and switch today. It's 10 a.m. in New York, 3 p.m. in London, and 10 p.m. in Hong Kong. From New York, I'm Bonnie Quinn.
And live from London, I'm Mark Barton. Welcome to Bloomberg Markets.
We are covering from the Bloomberg and around the world. U.S. oil prices break $70 for the first time in more than 3 years. This before President Trump's decision on Iran. We'll discuss the geopolitics of Iran and much more with Germany's ambassador to the United Nations. Christoph Heusgen joins us in our next hour. And Elon Musk battled it out with most of the analysts on Tesla's latest conference call. One retail investor was able to ask a dozen questions over 23 minutes and get answers. We'll speak with him. That and lots more in the next 2 hours, but we are 30 minutes into the Monday four-day trading session already, and there have been deals, Julie Hyman, and lots more.
A lot of deals, and also the oil trade is certainly playing into what's going on today. So we see the second straight session that we've had a rally in the S&P 500. It's the best 2 days in almost a month if you look at them together for the S&P specifically. And energy stocks are a big part of the rally today. They're the best performing group in the S&P 500 as we indeed see oil break above 70 ahead of that May 12th deadline.